Alibaba reported results a couple of weeks ago, and you guys were very interested in the first look, and so I put that out. And now what I'm going to do in this video is do a full analysis of exactly what happened in the year and just sort of like recap where we were and where we're going. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Now I'm sorry that this took a little bit longer to come out. Generally what I'll do is I'll put out my first look and then the full review will come out a day or two after. But the truth is that the market got very interesting. Things started declining over the past week or so. And so I've been more active in buying and selling securities than I have ever been, I would say, since 2020, I would say. And so, you know, it was a very exciting time for me. I really rotated the portfolio, the housing sector stocks did very, very well. I think on average, the return was around 70% over the past year. And so it was very exciting. But, what's the next sort of like opportunity on the horizon? I'm personally seeing banking sector stocks, but you guys let me know what you're seeing. I'm seeing selective opportunities in retail, etc. But I'm also continuing to see opportunity in Alibaba. I think that there's a lot here, and so let's take a look. So let's just level set first. So as of the recording of this video, Alibaba's share price actually declined 7% since reporting earnings, which I thought was very interesting because they laid out a pretty clear plan on how they're going to, sell off certain parts of the operations. The main operation is still going to remain within Alibaba. And that's really relevant because for any of us who are valuing Alibaba on a free cash flow per share methodology, a lot of the, some of the cash burn enterprises are leaving. So the free cash flow is expected to go up a little bit. Cloud is leaving as well. I presume that cloud is taking a little bit of that free cash flow burn. Now they are saying that cloud is generating an operating profit, but it still could be not necessarily providing free cash flow right down to the bottom line. So I don't know how it looks, but it sounds to me, or at least it looks to me on early view, that the overall company becomes more profitable as they sell out their unprofitable businesses. Now obviously you want to hold some of them. Like I would probably still hold on to cloud, but I may not necessarily hold on to some of the other segments. I may get rid of the international if they ever do spin that off. They didn't say that they were going to spin it off. I would probably also hold on to Fresh Hippo, which they did say that they are going to IPO. And so let's get into some of that. And so you guys know the most important piece of news that came out of the release, and it's right here on the front page of the release, is that Alibaba gave us a plan for their spin-offs. And I did cover in detail in the flash. And so the focus of this video will be more to dissect the results of Alibaba's key segments, which is something that I didn't dive into a lot of detail. And what's interesting is that in this video, or at least in their transcripts, which I encourage all of you guys to read, what they're now doing is the CEOs of the different business units are speaking about the strategy of those businesses. So I'm going to highlight some of that, but I do encourage you guys to read the transcripts. I think the transcripts are getting more and more exciting now as you're getting the key decision makers coming in and opining on the business and just talking about what the strategy is going forward. So a couple of points that I do want to make. The first one is that notice that the cloud group, or the cloud segment that includes their cloud business and DingTalk, that's actually being split off of the Alibaba group, I would say. And Daniel Zhang, in other words, their chief executive officer, is actually leaving the cash generating business. And cash generating business would be this one right here. So the segment that includes Taobao, Tmall, etc. They're calling it the Taobao Tmall group, but that's what I call China Commerce, or at least they previously called it China Commerce. I think they're just making it easy by calling it the Taobao and Tmall group. And so remember, the reason why they're not showing Fresh Hippo in this description, I mean, they're showing 1688, they're showing Taobao Deals, Taocaicai. The reason why they're not showing Fresh Hippo is because Fresh Hippo is being IPO'd from this segment. So just keep that in mind. But the other point, the main point that I want you guys to take away, is that Daniel Zhang is leaving what I would consider the core of Alibaba, the Taobao and Tmall group. And then you can see that there's going to be 4 other segments. And so I'll dive into exactly what they're doing with these segments, but you can see that, the digital media and entertainment group, it looks like this is being spun off. This is something, or, it potentially could be spun off in the future, but this is something that I probably would not want to hold International is probably something I would not want to hold. The local services group is again something that I probably would not want to hold. I would probably want to hold Cineao, but I want to know how it becomes, like how business changes for them as they become a separate entity, because part of the benefit of having Cineao is that it works synergistically with China Commerce. And so especially with some of the China Commerce new initiatives with Taocaicai and Taobao deals, they were setting up posts so that the delivery could be more effective for Taocaicai. So I wonder how this all plays out. It would be hard to make an argument that things will be exactly the same. I don't think so, especially as it starts operating as a standalone entity. Does it make the China commerce segments like Taocaicai, Taobao deals less competitive because they open up those logistics points to their competitors, mainly JD.com and Pinduoduo? So I don't know how that will work out. But this is a wait and see. And so for anybody that wants to hold on to the legacy business or, the cash generating business, this is an important point on how Cineao is going to operate once it separates itself from the main entity. Does it take away one of the competitive advantages that Alibaba has, which is its logistics network? So it's a wait and see here, but this is a bit of a negative and a scary point that I didn't think that was going to happen, but it looks like it's potentially happening now. With respect to the cloud spin-off, so once again, guys, this will be a full spin-off via a stock dividend. Now, I think a stock dividend for most people will not be taxed. I don't know how taxes generally work in most countries. I think it's not taxed. I might be wrong on this, but I'm pretty sure in Canada it's cash basis. So if you get a stock dividend, you don't have to pay tax on it. I'm not 100% on that. So you guys are going to have to look this up on your own. If you guys ask me in the comments, I'm just going to say I don't know, because I really don't know. And so what they're going to do is, prior to the spinoff, they're looking to include some external investors into the cloud intelligence group through private financing. So in other words, potentially dilute your ownership. I don't exactly know how that's going to happen, but this doesn't sound great to me. They need to provide a little bit more detail. So that's another sort of like knock against this. And of course, they're targeting the spinoff for the next 12 months. But once again, I need more information. I'm getting more questions from this earnings release than I'm really getting answers. But, that's the nature of this. It's a complicated thing. And as they provide more detail, we're just going to have more questions, and hopefully they provide answers to those. Now, international, it looks like they're going to be doing some external capital raising. And so it looks like they're exploring raising external capital for the business. And really, the point of raising capital for this business is that it is still generating a loss. And so they need to fund the business and fund the growth initiatives going forward. And so they haven't stated yet that this is being spun off. They're just raising external capital, but I could see that this business segment gets spun off in the future as well. And here's a set of IPOs. So once again, this one I'm a little bit worried about, the IPO of the Cineao Logistics Group. I even put it here, separating it from the core business seems odd. And so, they're going to try and IPO this in the next 12 to 18 months. Okay, fine. This one I very much agree with. Now, as much as I love Fresh Hippo, and I talk about it a lot on this channel, I feel like I'm the only YouTuber that really talks as much about Fresh Hippo as is done on this channel. I think this is a good IPO. I think this is something that a lot of people will be excited about, and they should IPO this in the US actually, because, a grocery, investing in the technological growth of grocery is something that I think U.S. investors will be very excited about. This is a very future-focused grocery retailer that's changing the game. And as you guys learn more about Fresh Hippo, you'll probably be as excited as I am. And so this will probably be a premium IPO, at least in my opinion. It may not necessarily be material overall, but I still think that they'll generate a good value for the Alibaba group shareholders with spinning this one off or IPOing it. Okay, let's get right into the results. So you can see that in fiscal 2023, their revenues only increased by 2%, but the real story was the focus on profitability. So you can see here how much income from operations increased, and they had a 11.5% free cash flow yield. So that's huge for the year. And they were telling us that they were going to focus on profitability in 2023, and they absolutely delivered. And so that is the name of the game overall. And I expect that the focus on profitability, and I expect profitability would actually just continue to increase, especially as they get rid of some of these cash burning businesses for the legacy business, or I would say the China Commerce Group as a whole. And just speaking to the revenue, you can see that China Commerce in 2023 didn't do as bad as I was expecting. I think I was forecasting them to decline around 5%. I was just being pessimistic there, so they definitely outperformed my expectations here. International, I was not very hot on international going into 2023, so I'm very, excited that they were able to outperform. It was very nice to see, and really it's from the retail side, which is up 17%. Now, keep in mind, the part of this segment is Trendyol, and you guys know that Turkey had, challenges this year, to say the least, with the earthquake, and so, I thought that this segment was going to go further back, and instead it actually went considerably forward, and so that was great. Sinyao, of course, is up considerably because they're pushing their new business lines, such as Taocaicai and Taobao Deals. I don't know how this will get impacted once it gets spun off, but we'll see, or IPO'd. Cloud, only up 4%. If the cloud industry is growing at 20 to 25%, they're definitely lagging. Part of this is just the lockdowns and such, so I'm really hoping for acceleration with the cloud business. Ultimately, the good thing is they're not IPOing this. We'll still own it. We'll just own it as a separate entity, and so that's good. The one that I want to own, I'm glad that there's no vagueness to it. We're still going to own the business, and so that's what I really like. Plus, we'll be able to own this business while having the leadership of the current CEO of the company as a whole. And so I'm glad that they're spinning it off through a share dividend as opposed to IPOing it. And starting with China Commerce, there isn't a lot to say that I already haven't said in the previous quarters, but what you guys got to know is that it's the customer management segment that went behind on the year. And remember, guys, that the customer segment is the one that holds Taobao and Tmall, and of course it got impacted because of the lockdowns in 2023, and that's why I went backwards. And really what was happening is that people were making orders on the site, but then they were canceling them because there was logistics disruptions because of the lockdowns. You couldn't deliver the product, or the product couldn't get made because the factories were closed, blah, blah, blah. There was just a lot of headaches. It's not that the consumer went away. So the first takeaway is, do not discount the resiliency of the Chinese consumer. They've been there. It's just they're being blocked by their government. And so that's a really good thing, because it's another thing I like to say about the American consumer. Do not ever discount the resiliency of the American consumer. And we're seeing that in 2023 as this expected recession is still missing. It might come in 2024, but we were saying that in 2022. So, once again, I think China is emerging more than people would like to give them credit for. And so, keep in mind that China's consumption did gradually recover throughout the quarter, ended in March. And the reason why is because the lockdowns ended probably mid-February. And so for half of the quarter, you had strong consumption. And so I think the next full quarter will really reflect the strength of the Chinese consumer. But keep in mind that they are a little bit negatively impacted by the fact that the global economy is slowing. So there is a push and there's a plus and a minus here. And so the other thing is, and I'm going to show you the new CEO talk about this, but in April, they actually started testing a new interface for the Taobao app that aims at increasing front page exposure for live streaming channels for price competitive products and neighborhood shopping categories. Now, why does this matter? It's all about stickiness of these apps. If you can make the shopping app more entertainment focused, entertainment based, I think you win in this environment. And the best example of that is TikTok. There's lots of memes or lots of videos that are going around the internet of, it starts off by saying TikTok made me buy it. And, there's a lot of consumption happening as a result of these TikTok videos. So, I could absolutely see live streaming, and I mean, it's already happening in China. This has been happening for a long time, that live streaming drives sales, but also, TikTok type channels, maybe YouTube type channels being accessible right on the app. I think that'd be very good. There's a lot of times where I'm on the Amazon app and I look at a product and then I go onto YouTube and see if somebody's made a video on it. How great would it be if the video's right on Amazon? And so I see a lot of use for this, and I'm excited that they're moving in this direction. And so I was speaking earlier about the new CEOs. I mean, Trudy Dai might not actually be the new CEO. She might have just been the CEO. I'm not really sure, but this is your China Commerce Group. They're just calling it the Taobao and Tmall Group now. And like I said before, going forward, they're going to have the CEOs of the different businesses speak on the calls. And so, a couple of interesting points I did want to point out. Now, I'm not catching everything, but one of the things that I do want to focus on is that they are focusing on cost optimization and efficiency improvement within the segment. But she also mentioned something called 5 battles. Now, for this video, I didn't actually research it, but what I'm going to do for our next video is focus the video exclusively on these 5 battles. I think we can get an interesting video as to exactly what she's talking about here. I've missed it. You guys might actually know, so let me know in the comments. And also, if you guys have links to this, just email me and let me know. I do the best that I can, but I can't catch everything. And so this is one that, perked my interest, and I want to learn more about exactly what she refers to as the 5 battles for this group. Look, this is the segment that I'm most focused on. I'm excited to continue to own it. And so I really want to learn about exactly what she's referring to there. And just speaking about China Commerce, high level, this is what they're looking to do. They're trying to increase media content that strengthens their consumer engagement. That's what I talked about previously about the live streaming and the videos, etc. They also want to be more price competitive through more effective targeting and introduction of new marketing features. I think you can roll out AI into this as well. So, I mean, they may not necessarily be talking about it yet, but I think they will start talking about it. And then, of course, catering to consumers' time-sensitive needs. So, look, there's a read through here. They weren't able to do this during the lockdowns and they lost sales as a result. And so they're looking to refocus on this as the government gets out of their way, especially for high frequency everyday necessities through their neighborhood retail businesses. And so, I agree with their focus here. Look, they're looking to be more future focused, but they're also looking to be more price competitive. And in terms of logistics, it should not be an issue, especially for the most in-demand products. And they go on to say right here in April, they started testing a new interface for the Taobao app. I've already talked about this, increasing front page exposure for live streaming channels for price competitive products and neighborhood shopping categories. So, as the next few quarters come on, I want to understand exactly how they're succeeding at this initiative. And so the CEO did talk about this a little bit. And so essentially what they're doing is they're merging interactive infotainment and online shopping. And so I'm saying that the age of this is coming. And so essentially consumers want to find a broader range of more diverse content on Taobao, including shopping related encyclopedic knowledge, lifestyle recommendations, and even interactive entertainment. And I absolutely agree. This is something that YouTube has also been talking about. They want to make their shorts and their videos shoppable. And I think the minute that YouTube can figure out how to do that, they win. Especially in their CTV focus, because YouTube is really trying to hone in on winning CTV. And so if they can make CTV shoppable, they win. And I think if Taobao, if they can make their videos and content shoppable, like immediately shoppable, they win. And so let's see how this plays out. And so the other thing that they're doing is they're making investments to further enrich and diversify merchandise assortment to create more differentiated content, to introduce new interactive entertainment scenarios. And so that's really great because look, they're building out not just the types of content that's going to be available on the app, but they're also trying to build out the types of products that are available to be purchased, and then find the synergies between the products and the new interactive entertainment scenarios that potentially could come from it. So I like the move there. But once again, execution is everything here. If anything, I would say that there's a risk of execution failure here. So we need to pay attention to this, stay on top of it, and see how it looks going forward. I'm going to be paying attention to this in each one of the conference calls going forward to see how this plays out. Now, Taobao will be progressively upgraded into a one-stop consumption and lifestyle platform. Once again, let's see how they deliver. I'm not getting super excited about this. I'm definitely not giving them any credit in the model for this, but let's see how it plays out. And, maybe down the line, we might give them some additional credit for this. But as of right now, it's just too high level general. I'm excited about it, but it's not moving the needle in terms of my valuation. So stepping into international commerce, once again, you guys recall, they're up 13%. But here's the thing, it's not just that revenue's up, it's that they're more profitable. Yes, they're still taking an adjusted EBITDA negative margin, so a loss, but it's a smaller loss on a higher revenue base. So this is very good. And so here it is. The increase in revenue from Lazada is driven by continuous improvement in monetization rate by offering more value-added services and the robust year-over-year order growth. I'm going to talk about the value-added services in a second. Now, here's something interesting. AliExpress, I talked about this last quarter, and so it's very exciting that they're providing us an update on this. So AliExpress created what's called Service Choice to global consumers, and effectively what it is, it's free delivery on certain products. Actually, they talk about it right here. Choice offers consumers a curation of great value products across an extensive range of categories. Consumers in selected countries enjoy free shopping, free returns, and quality delivery guarantees when placing orders on Choice. So it's, in other words, it's Amazon Prime, but it's available to many countries, and so that's very exciting as they continue to roll this out. This becomes a competitive advantage, I think. And so, the other good thing about Lazada is that they've continued to increase their buyer base. Now, look, they were aggressively going after buyers and sort of helping them along, and so I'm glad that this is happening. Look, they're winning with international, and so I'm back and forth on whether I'd want to keep Lazada as it gets spun off, but keep international. I think I need to learn a little bit more about the business. I hope that they provide way more disclosure as it comes out. But, I'm very bullish on AliExpress and Lazada and really Duraz. I wonder if Duraz can make moves into India. I'm not really sure. Right now it's in Pakistan. We'll see how that plays out. If you guys know why they can or cannot make moves into India, let me know. And so here's the international segment's CEO talking about this business. And so once again, like I said, they're bringing on the different CEOs of some of the different segments to talk on their conference call. So very important to read the transcripts, guys. I can't stress that enough. And so this past quarter, the international commerce segment has shown rapid growth momentum. And so what exactly does this mean? And so they go on to say, in Southeast Asia, Lazada's monetization rate continues to improve, achieving a good balance between business scale growth and operational efficiency improvement. Now, here's the thing. One of the areas where I was worried about was profitability with Lazada, because they said that they were, helping merchants. And so to me, that sounded like they're sacrificing profitability for top line growth, but that's not at all what's happening. They're growing while increasing profitability. So this is better, like way better than I thought. And so, they go on to say, there's still significant potential to grow their cross-border business with the launch of Choice Service. This is for AliExpress. AliExpress's user experience has significantly improved, and AliExpress businesses will continue to grow. So I'm very excited about AliExpress as well. And so, Lazada, AliExpress, those are the two bull cases for the international segment. And I'm excited to hear what they have to say going forward. And so in the business-to-business wholesale sector, they've made many upgrades to their existing models, expanding from transaction services to other value-added services such as finance, logistics, and digital SaaS services. So here's another thing. Cinyao is also involved in the logistics segment. So once again, how does Cinyao, being taken away from the larger business or the business group as a whole, impact the services that are being provided to these segments? I'm hoping that the answer is no impact. And I think that they're going to do that. They're not stupid, I don't think, but I would just like to be told that. And so, let's see how it plays out. Now, once again, somebody might have asked the question. I might have just missed it. So if you guys know the answer to that, or at least can point me to the answer, let me know in the comments below. Now, moving into cloud, notice, guys, that, AI is a very hot trending topic right now. Alphabet's talking about it. Of course, Microsoft has been talking about it. Now, look, Alibaba, unveiled their latest language model, and they're looking to integrate it into all business applications across the Alibaba ecosystem in the near future. Okay, fine. Everybody's kind of saying that. Let's see how they execute. I'm not giving credit to anybody, Alibaba, Alphabet, Microsoft. I'm not giving credit to anyone in their valuations for this. It's very difficult for me because I'm not a tech expert. That's why. And so this is what I do understand. However, though, Alibaba Cloud is trying to make their service offering much more accessible by making it more affordable. And so what they've done is they've been able to offer it, they've been able to create a 40% cost savings reduction, which of course they're going to look to pass on to the consumer. That's what it sounds like. And so, overall, revenue is up 4%. The EBITDA margin is still 2%, same as last year. I'm really looking for an uptick in the revenue. I'm looking for like 20% in 2020 or fiscal 2024. I don't know if they deliver. They didn't provide enough guidance to let me know that that's the direction that they're going. And so this next quarter will tell us a lot about the directionality of the cloud business. Now, look, even if you're heading into a recession, one of the ways to cut costs is by moving stuff that's previously manual into the cloud. So let's see how this plays out. I'm not really sure how to think about this yet, and so I'm not overly optimistic in my forecast. And so the man, the myth, the legend himself, Daniel Zhang, spoke on the conference call about the cloud business. And so he went on to say that the resurgence of the pandemic in China in January also impacted public cloud consumption and delayed delivery of certain hybrid cloud projects during the quarter. Now, this is something that we knew. And so the question is, now that things are reopening, they cannot use this as an excuse anymore. And so we have to see continued growth in the cloud business. And so look, they're saying it again. They see massive market potential and remain confident in Ali Cloud's future. Okay, show us delivery, show us execution. Now, they're also talking about AI. I'm not getting excited about AI. They're saying that the age of AI brings 2 new historic opportunities to Ali Cloud. Okay, then show us on the delivery front. Now, I'm very optimistic, but at the same time, I'm not going to get super optimistic in my model unless they can show us something in their quarterly results or provide me with a really good roadmap, both of which they have not been able to do yet. So here I am, an Alibaba bull, but I'm being very tough on them in terms of their valuation because I'm waiting to see something here. Now, turning to the balance sheet quickly, you notice that they continue to have quite a bit of excess capital on the balance sheet. You can see that there's 28 billion of cash, 47 billion of short-term investments, and the restricted cash on the balance sheet is $5 billion. And then, of course, they also have a large portfolio of equity securities and investments in equity method investees. I would really like to see more share repurchases if you have this much capital. We have been somewhat disappointed, especially considering that the share price is in the dumps. I would expect higher share repurchases when the shares are trading under $80. And so let's hope that there could be more share repurchases in the future. I don't know. I think they've kind of just been standing still because they don't know how this whole thing is playing out. So they don't want to be overly excessive with their repurchases. But I would like to see more guidance on how they're looking to repurchase shares. I don't think that they will provide us with those guidance, but at least they can give us an indication by increasing what's been approved to be repurchased by the next quarter. I don't know if that even happens, but I just want some sort of understanding that they're looking and being opportunistic by repurchasing shares where they're trading significantly below intrinsic value, which becomes absolutely accretive to the current shareholder base. And just to put it into perspective a little bit, this is a section from the Alibaba model that the Patreons get access to, and I've updated as of March. So if you just include the cash, the short-term investments, and the equity securities, and then you deduct the short-term and long-term debt, you're getting to excess capital of around $33 per share. So if you're telling me that, 33.81 divided by $85 per share, which is kind of where it's trading at right now. If you're saying 40% of the business is just excess capital, that's kind of crazy. Like 40% of the current share price. That shows you how cheap this business is right now. And then, once again, I did remove the investment and equity method investees here, but here's where, there are some businesses that they're looking to IPO as well. The big one being Ant Group. And so, you can absolutely generate another a considerable amount of capital just from one IPO of Ant Group, which I think in this environment is probably closer to go through than you guys think it is. And so I would say that, conservatively, this does add another $11 per share. So if you're saying that $45 per share is excess capital and the current share price is $85, then you're saying that more than half of the share price right now is excess capital. That means 48% of the current share price is the valuation of the business. Is Alibaba really worth $41 per share? Because that's a hell of an equity yield. If they're generating $8 of free cash flow per share, 8 divided by 41 gives you a 19.5% equity yield. So that's absolutely insane. And that's why Alibaba remains the number one cheapest stock on my tracker that I track and the Patreons get access to. Now, once again, repurchases have been slow. I really do hope that they take advantage of the depressed share price and buy back shares in Q1 of 2024. I don't know if they do. Now, here's the thing. They repurchased $1.9 billion, and they have $19.4 billion remaining under their current authorization. And so, this is a lot. And so it doesn't look like they'll increase the authorization, but give us some guidance. Like, tell us that you're thinking at least about increasing the share buybacks as the price remains lower or something. I don't know. Like, are there any regulatory risks from doing that? I don't know. I wish that they provided a little bit more guidance here, because it's quarter after quarter where we keep asking, why aren't they taking advantage of the low share price? And so this has been a bit of a tough issue for me. And just going into the valuation quickly. So once again, the days of China commerce growing at, the high double digits or whatever, like 20% a year or whatever, that's gone. They definitely went backwards in 2023. I don't expect significant improvement in 2024. I think 7.5 is good enough. Anybody who's forecasting higher than that, I don't think anybody's forecasting higher than that right now, but 7.5, that's really saying that their economy is probably going to grow at like 5%, and then Alibaba, like overall the economy in China is going to grow at 5%, and then Alibaba overall will probably do a little bit better than the overall economy. That's all this is really forecasting. And then international, they did 17% last year. I'm just being a little bit pessimistic here. And so, overall international did 13. I'm doing 11, fine. Local consumer services, once again, a little bit lower than last year. Cineao, I might be a little bit too pessimistic. That's fine. Cloud, I'm just doing 10 across the board until they can provide us with something. 10 also might be a little bit optimistic, depending on what they show us. So I'm interested to see what they do show us. And then the other segments, I'm not really doing anything. And so overall, I'm expecting revenues to grow at 8%. This is not exceptional by any means, but here's the point. The fact that I'm not expecting revenue to grow considerably or at high hurdle rates, and how low the valuation is relative to its intrinsic value. Now, if you guys want to see the valuation, once again, the Patreons get access to it, and you can take a look at the valuation of not just Alibaba, but all the other models that we have at the lower tier. And one thing is, I did speak earlier on this call about how I've been buying quite a bit of securities. Now, nothing is ever a recommendation for you guys to buy securities or whatever, but if you want to get an idea of exactly what I've been researching and what I'm interested in, you can join us on our live monthly calls. I think they're very interesting. But the other thing is, I'm putting out 2 live courses this month. One of the courses is going to be about how you can create your own tracker, and another course is about how I create a budget that rolls into from a weekly to a long-term budget. I spend more time looking and analyzing the budget than I do even on the tracker, because it's important to make sure that everything reconciles. At the end of the day, we're long-term savers, and so we got to have that long-term plan. And so I think there's a lot of value in these live courses that just a part of this package. And then the other thing is, one of the areas that I've gotten really heavy into, and it's the second largest position in my portfolio, is regional banks. A lot of people say don't invest in regional banks right before a recession. I say, do what you want to do, and it's totally okay. And I found some opportunities in the regional banking space. Most are duds, but I found some interesting opportunities. And so regional banks are the second largest position in my portfolio. And the comps schedule is a schedule that analyzes 63 regional banks, and I'm going to be adding around 20 more. I might want to get that up to, like 80, 90, in the 90s maybe. It's just an analysis of key performance indicators of some of the best regional banks in the country. And this comp schedule, there was a lot of work put into this. It took weeks to create. This is once again free, or not free, but included in that top tier. And so pay attention of all the items that you get. And I do believe that this $15 a month tier is the most value that you can find on YouTube Finance. And the other thing is, I will link this course, but there is a special live course for people who are in the higher tier. I review the key performance indicators for investing in banks. I apply those performance indicators to banks as we analyze them, and I provide my personal ranking of the banks analyzed. And so it's a very interesting analysis. It's a 2.5-hour video, but it's once again something that's provided to the people at the higher tier. And so I'll leave it there. Now, what I want to know from you guys is, are you still investing in Chinese securities? Why or why not? And if you're not investing in Chinese securities, where are you seeing value in the market right now? I just told you that I'm seeing value in regional banking. I'm seeing some value in retail, but some retail is a falling knife, so you got to be careful there. But I want to know what you guys are seeing, so let me know in the comments below, and I'll leave it there, and I'll see you guys later.